All right, we're live, we're live, we're live. Good morning, everybody. Hope you had a nice, restful, and restorative weekend. We are back this week. I know technically everybody was back yesterday, but I took a personal day yesterday, and I'm excited to kind of get back into things this morning. Yes, good morning, Devetta. Good morning, Vivian. I think you guys hopped in before I even started the live. I did not know that was a possibility here in the YouTube studio, but I guess you learn something new each and every day. Yes, good morning. Good morning. I had quite the packed week last week. We finished up with the challenge. That was an amazing experience. Got into some amazing information. And then, I just had a ton of stuff over the weekend. We had birthdays, unfortunately, had some family pass, and it was just definitely a much needed reset day on Monday. So if you email me, if you reached out, I'll be getting back to everyone over the course of, today, tomorrow. So be patient with that. Other than that, we're here to dive into the news, right? The news and notes that we have for this week. I'm not going to spend a lot of time with introductions, right? Make sure you throw that one in the chat signifying your intention to get 1% better. Welcome to the Premarket Rundown, right? Our daily session, 8:40 a.m. Eastern Standard Time, where we go over any and all information necessary to keeping you consistently profitable here across markets. I'm going to directly dive into what we have going on because since we weren't here yesterday, we're going to go through the week ahead as well as the Monday specific news and the Tuesday specific news. So we'll have plenty of stuff to go over. I'm going to go ahead and dive in right now, starting with the week ahead, right? So this kind of lays the landscape for the whole week. So the calendar this week includes some wild cards with the potential to jolt key sectors. Tesla, ticker TSLA, will hold a highly anticipated investor event, while Chevron, ticker CVX, and Goldman Sachs, ticker GS, will also hold their annual strategy updates. On the macro front, Fed speakers will be back on the circuit, and economic releases include the latest durable goods orders, the FHFA Housing Price Index, and the S&P case construction spending numbers, and speeches from the Fed's Raphael Bostic and Thomas Barkin. The earnings schedule is also active with all Target, Lowe's, and NIO due to report. Let's see here. So, Seeking Alpha contributor Alpha Sieve thinks Target is at risk to see earnings drop. And Value Pendulum said Rivian Automotive is set up for a good year no matter what earnings bring in. So, everybody just kind of, throwing their opinion in there when it comes to earnings. In terms of the earnings spotlight across the week, we had LI Auto or Lee Auto. They reported yesterday, as well as Occidental Petroleum, Oxy, right, a favorite in the energy sector with Warren Buffett's heavy investment there all last year. Today we've got Target, ticker TGT, AutoZone, JM Smucker, SJM. What else? Rivian, and then AMC Entertainment. So we got some meme stocks, some EV stocks. We've got some defensive, consumer defensive, and then we've also got Target, which used to be considered consumer defensive, but Target really struggled last year because they transitioned to a lot of their inventory being consumer discretionary. They did that while interest rates were in the midst of increasing. Not very smart to do, right? You want to be carrying stuff that people need to purchase, not things like flat screens and all these other things that people only purchase when the economy is doing well. And their struggles to change that inventory really bogged them down last year. So we'll see if that changed any this past quarter as we get information on Target today. For Wednesday, we've got Lowe's reporting LOW. We've also got NIO, ticker NIO, Dollar Tree, ticker DLTR. We had Kohl's report, Salesforce, which is CRM, Splunk, SPLK, and Snowflake, ticker SNOW. So a few, names of repute here that will be reporting over the course of the next few days. Lowe's, NIO, Dollar Tree, right, Snow. Which we traded pretty recently to the tune of, over 500% profit, which is beautiful on Snow. Earnings spotlight Thursday, we've got Kroger reporting, that's grocery store. So again, consumer defensive. Anheuser-Busch InBev, whose ticker is Bud, BUD, that's Budweiser. Best Buy, Macy's, Costco, Broadcom, and Dell. So, we've got some recognizable names here across a lot of different sectors this week. So just make sure you keep that in mind as you're going through your placing trades. You always want to make sure that whatever you're placing trades on, there isn't earnings going on. That's a huge thing that a lot of people overlook and they miss, and then their trades are affected, and you only know afterwards. Some people never even know, right, what ended up happening. But a lot of times you have stocks that can move in sympathy with certain stocks because they're in the same sector, but then you also have some stocks that are competitors with a stock that might do well during earnings, and then that stock sells off because it's a competitor. So it's just a lot of dynamics to watch out for during earnings season. So you want to know who's reporting, so that way you're not caught off guard. Because let's say you're in a trade on Home Depot, and Lowe's has bad earnings, Home Depot can be affected. Or you're in a trade in Dollar General and Dollar Tree reports and it doesn't do well, right? Then Dollar General can also be affected because it's in the same sector. In terms of outlook here, Tesla, bright lights on Tesla. Tesla will hold an Investor Day event on March 1st. That could be one of the key days of the year for the electric vehicle giant. The event will be live streamed from the Gigafactory Texas site and is expected to include discussion on Tesla's long-term expansion plans, Generation 3 platform, and capital allocation. A tour of the Austin factory will be included for those in attendance in person. Naturally, analysts are buzzing over what Elon Musk and gang will highlight at the event. The automaker's Generation 3 platform is anticipated to lead to cheaper electric vehicles in the future, although it is unclear if a new mass market model will be unveiled. The tease about capital allocation has some investors focused details of a stock buyback plan. Maybe they mean focused on details of a stock buyback plan. The third part of Tesla's master plan will be a key part of the event. The next gen Tesla Roadster, Cybertruck, new vehicle platform, autonomous driving applications, energy storage initiatives, charging network revenue potential, and Tesla Robot could all be woven into the master plan. Oppenheimer thinks that Tesla may be more granular with the Investor Day talk and delve into cost reduction efforts. Manufacturing efficiency, progress on new products like a low-cost passenger vehicle and semi-truck, along with a more fulsome update on FSD, full self-driving. Bernstein thinks Analyst Day is likely to provide some incremental details on the next-gen vehicle platform, but noted it is unclear that Tesla will be able to adequately address the concerns of bears around timing. Goldman Sachs expects CEO Elon Musk to discuss in broad strokes what is needed for the world to transition to sustainable energy. Other key topics are anticipated to be full self-driving, the Optimus robot, financial drivers, including EBIT margins and OPEX leverage, capital allocation, lots of boring things. In terms of quotes, we expect the transition to sustainable energy and the outlook for Tesla's energy segment to be one of the most prominent parts of the event. Previewed the firm. Of note, Tesla said that the total addressable market for energy could be larger than automotive, and the company is in the process of ramping a 40 gigawatt mega factory in Lathrop, California for its utility scale of megapack product. So that's one thing that Tesla's really banking on is their first they had the lead, right? They had the kind of lead advantage of being early to the EV space and really investing heavily in it. And now they're really investing heavily in the charging network and the infrastructure that will power all EVs, which I think is another, very important and smart power move. Because at the end of the day, you might not be driving a Tesla, but you will still be probably using a Tesla charger in order to charge that vehicle. So just making sure that they are important no matter what happens, what trends take over or how fast these, traditional combustion engine companies can catch up with them, right? You're still going to need us. So they're really focusing on infrastructure and charging networks and things like that. For investors, shares of Tesla have a track record of rallying in front of a publicized event and trading back down after the reveals. So that's that classic buy the rumor, sell the news type of thing where you buy the rumor up until the event and then you sell, once you actually go into the event. But that's, pretty much everything in terms of laying the groundwork before Tesla's important Investor Day event. And now we'll go ahead and move on to Target's earnings preview. So Target will be the headliner in the retail sector this week. They're projected to report $30.7 billion in terms of revenue and earnings per share of $1.40. Comparable sales are expected to be slightly negative during the quarter, although price increases during the quarter have cut the confidence of analysts in calling out a number. Bank of America warned that incremental mixed pressure could have impacted Q4 margins, with traffic being supported by sales of lower margin, higher frequency consumable categories, as well as elevated promotions. Looking ahead, elevated food inflation is called a risk in terms of driving continued wallet share away from higher margin discretionary categories. Positive factors for Target include incremental benefits from the announced cost savings initiatives of $2 billion to $3 billion in savings over the next 3 years, and the potential market share shifts from Walmart and warehouse clubs. On the conference call, analysts will be looking for updates on consumer discretionary spending trends, inventory challenges, and supply chain challenges. Those are the three big things to be focused on, right? Are consumers now spending more money on discretionary items, meaning things that they don't need to survive? That's, the sign of a thriving economy when people spend money on flat screens and 4K cameras and all this stuff that they don't actually need to survive. They do it because they have extra money. Target had way too much of that inventory last year. They struggled because of it. Have they been able to sell any more of it as they've had, a lot of it on sale and things like that to kind of get it out of there. Um, and then also listening up, on things like the supply chain, right? We need to be making sure that all these different companies that are reporting, what information are they telling us about the supply chain? Is it getting any better? Because we know that that's one of the big seven factors, right? Throw a seven in the chat for the big seven. That is one of the big seven factors that is shaping how markets are moving, both domestically and internationally, right? We've got inflation, interest rates, COVID and all of its variants, employment, the supply chain, the war in Ukraine, and then we've got the death of globalization and the rise of protectionism. All those seven factors are shaping how the market is moving. So you got to be aware whenever you can get some information on, any one of them. Now, in terms of Monday specific news yesterday, and we'll kind of pick it up here so we can get through it. 4 days a week, the world's largest trial of a 4-day work week is wrapped up with nearly 3,000 employees in the UK taking part in the 6-month pilot. Among the findings were better work-life balances, fewer sleep problems, drops in burnout and quitting rates, and even revenues that increased modestly. In fact, of the 61 companies that took part in the trial, 56 are continuing to implement the 4-day work week, 18 of which will be permanent, while 2 firms are extending the trial and only 3 are going back to their previous schedules. The program was a major collaboration spanning nonprofit 4-day week global, the 4-day week campaign in the United Kingdom, and the think tank Autonomy. So, some history. In the U.S., Henry Ford is largely credited for standardizing the 5-day, 40-hour work week. In 1926, he shortened the then prevalent 6-day work week routine without reducing employee pay, saying we can get at least as great production and probably greater. Later in the 30s, President Franklin Delano Roosevelt signed the Fair Labor Standards Act, which was subsequently amended to make the 40-hour work week a standard, after which overtime pay applies. The years went by, and in a 1956 speech, then Vice President Richard Nixon forecast a 4-day work week would happen in the not too distant future, but it would take many decades until the topic would start making headlines. So, we're really seeing the 4-day work week start to take off. This may be a means of compromise. Right now, jobs and employers are having to compromise with their employees. They're having to go in and say, hey, if you don't want to come into office, would you be willing to come into office if you had a 4-day work week, right? All these different things. There's definitely a lot of bargaining that's happening. But overall, they talk about how the majority of people don't need to be in the office 5 days a week, right? They don't even need to work 5 days a week. A lot of the work that needs to get done could be done in only a few days. And then you have people that are happier, more fulfilled. They get to spend time with their family. They get to relax, and you get better rested employees. So, I'm definitely a fan. I work for myself, so my boss is kind of a hardo sometimes, but that's because he's me, and I'm always trying to push myself, right? So, but at the end of the day, it's good to take rest days. Good to make sure that you are, ready to push forward and avoid burnout. So, hopefully we start seeing this a little bit more. Let's see here. Why not 24/7? Crypto trades around the clock, and futures almost do as well. But when it comes to the U.S. stock market, many feel that better price discovery happens when most Americans are awake. For many market makers, exchanges, brokers, investment houses, and even financial professionals, a shift to 24/7 trading would make their lives more complicated. And in many ways, they dictate the resources in the current trading environment. Upending traditional prices can also be difficult, as can be seen by calls to shift the securities settlement process. Yeah, I don't want stocks to trade 24/7. For all my people that trade crypto, that's awesome. I'm not going to be up all night trading crypto. You should not be either, right? If you want to be a nice, healthy person and also a good husband, wife, brother, sister, mother, father, you should probably get some sleep. So even if they do start trading stocks 24/7, you won't see this guy doing that. In terms of trending news here, Berkshire annual letter. While many are still debating Berkshire Hathaway's operating earnings from 2022, one thing is clear. The Oracle from Omaha is sitting on a record amount of cash. The investment giant led by Warren Buffett held $128.7 billion of cash in short-term securities at the end of Q4 versus only $109 billion on September 30th. That's even with the company acquiring Allegheny Corp in the last quarter of 2022. Buffett also had something to say to those critical of stock buybacks. When you're told that all repurchases are harmful to shareholders or to the country, or particularly beneficial to CEOs, you are listening to either an economic illiterate or a silver-tongued demagogue. Yeah, that's what we call shots fired by the Oracle of Omaha. And he wrote that in his annual letter to shareholders. Now, in terms of trade news here, Brexit Bulletin. Post-Brexit trade settlement for Northern Ireland may be within reach as British Prime Minister Rishi Sunak and EU leader Ursula von der Leyen hold talks today in London. That was yesterday. And we actually have more news on that today, so we'll get into that actually probably right now. Let me go over kind of the last news and notes from yesterday. So in terms of the rapid fire bullet points from yesterday, we had Union Pacific, ticker UNP, looking for new CEO amid activist pressure, shifting away from phone business. Nokia revamps iconic logo. We have largest U.S. grid operator warns of coming power capacity shortfalls. Netflix top streaming views again, thanks to you people. HBO, very funny movie if you guys haven't seen it. HBO Max, which is actually owned by Warner Brothers Discovery, ticker WBD, sues Paramount over South Park. Data suggests discount stores could be big winners in 2023. Not ideal, but outright crypto bans shouldn't be ruled out. That's from the IMF. Average apartment size in the U.S. sees largest decline in 2022. Ford extends production pause on F-150 Lightning amid fire risk. And then Tesla Investor Day preview our cheaper EVs part of the master plan. Now, we're going to dive into our Tuesday specific news as we hit the crazy trifecta. Throw a 3 in the chat if you're still with me, you're still listening. We got a number of things to cover today, but we're going to make sure that we knock all of it out. Let's go back here. See if we can. Okay, cool. And speaking of Brexit, right, continuing to kind of refresh what we have going on with Brexit here, and I want to make sure we're centered. So I'll give it the double peace sign because the camera learns how to center for some reason because of that. But a new tone. With Brexit, there's a fresh chapter trying to be written in the Brexit story that has enveloped the UK since an EU membership referendum in 2016. While tensions have lingered around the bloc that Britain once counted itself a part of in terms of like the EU, things have been further complicated by the Northern Ireland Protocol, which has been in place since 2020. That agreement followed years of negotiations on how to govern trade following Brexit and sought to prevent a hard border from being erected between the Republic of Ireland, which is part of the EU, and then Northern Ireland, which is part of the UK. So in terms of backdrop, at the time, the protocol was seen as essential to protect a 1998 peace deal that brought an end to the decades of sectarian violence, often referred to as the Troubles, but eventually exposed other divisions by creating a border in the Irish Sea between mainland Britain and Northern Ireland. Communities that strongly identified as British in the latter region despised the arrangement, saying it isolated them from the UK, while some British companies severed ties with Northern Ireland businesses due to increased paperwork. A trade war also threatened to erupt after the UK repudiated and even threatened to override parts of the agreement that left Northern Ireland in the EU's single markets for goods. Looking to take a different direction, Rishi Sunak, the third UK Prime Minister within a year, is aiming to heal ties with the EU while pushing Eurosceptic MPs in his party and the DUP in Northern Ireland to get on board. He just unveiled a new Windsor framework with European Commission President Ursula von der Leyen that would set two classifications of goods that traverse the Irish Sea. So what they're going to do is basically have a green lane for Northern Ireland with minimal checks and a red lane that would be subject to higher scrutiny and documentation for things destined to move into Ireland and the EU. The framework also includes tax policy amendments, provisions for medicines, and a sovereignty mechanism called the Stormont Break. So this is just a mess, right? Brexit was a mess. It continues to be a mess. And, it's a mess between the UK, Ireland, and the EU. And they honestly, I don't think they ever should have done it. The biggest trending search on Google after Brexit was what is Brexit and what does Brexit mean? So everyone in the UK pushed for Brexit without knowing what Brexit is. And then Boris Johnson, the prime minister who pushed for Brexit, is no longer even there. So it's just one of those things where people get caught up in inflammatory rhetoric and, they're like, I want this, and they don't even know what this is. And then, we get stuff like this, like ongoing just struggles. So going deeper, the developments come at a time when the European unity is threatened by Vladimir Putin's war in Ukraine. President Biden also applauded the Windsor Framework, calling it an essential step to ensuring hard-earned peace is preserved and strengthened. While Sunak further sees the deal as helping out the UK economy, which has recently seen fruit and vegetable shortages and other curveball to the inflationary environment. To add another curveball to the inflationary environment. So while there have been some signs of a business rebound, Britain remains the only G7 economy still smaller than before the coronavirus pandemic, and the Bank of England doesn't see a recovery to its pre-COVID peak until 2026. So we have one of our major allies here in the UK that is just struggling, right? They never even broke pre-pandemic highs, and they never even recovered from the pandemic. So these are the type of things that, in succession, right? You ever had a flat tire and then a tree fall on your house, and then you have a family member that has health issues. You ever have those things in a row? You can get into the spiral where it's tough to recover, and that's really what the UK is in, where it's just kind of Brexit and then war and food shortages and electricity being high and all these other issues that are just stifling them. In terms of trending news here, we've got Disney versus Desantis. So the corporate kingdom finally comes to an end. Florida Governor Ron DeSantis declared after signing a bill that gives the state control over Walt Disney World's self-governing district. So if you guys, remember correctly, Florida and Disney had gotten to it a little bit last year. And the guy who started the beef, who worked at Disney, was fired. But it looks like Florida is not yet done with Disney, and this will probably cost Disney some more money. So the move was a long time coming and follows the Don't Say Gay tussle between Disney and Florida's legislator last year. So there was like a whole saga over this, and it was called the Don't Say Gay issue. And it was between Florida and Disney, and it just, turned everything upside down and cost Disney a lot of money. And, this is looking to further cost Disney more money. DeSantis will be able to appoint a 5-member board that will have external oversight over the Reedy Creek Improvement District, which has its own tax and bond authority, and it will no longer be exempt from certain state codes and regulations. The new red tape may dissuade Disney's new infrastructure investments in Florida for the immediate term. Seeking Alpha contributor Juxtaposed Ideas wrote in an article that discusses other impacts on the company's theme parks. So we'll see how that affects, Disney and how much they're looking to invest in their theme parks in Florida. Maybe they take that investment elsewhere. But yeah, definitely an escalation in this feud between Disney and the state that Disney, is housed in terms of at least Florida, right? It's also in California. Earnings, retail on the radar, targets due to publish Q4 earnings in the pre-market hours, kicking off a session that will also include quarterly reports from Costco, Dollar Tree, Macy's, and Kohl's. So we've got a number of different reports that, are coming. Follow some cautious commentary across the retail sector from the likes of Walmart and Home Depot, as well as toy manufacturer Hasbro and discount retailer Dollar General. So while Target stock has marked a double-digit gain since the start of 2023, rebounding from a sharp decline in 2022, shares have faltered slightly amid a spate of less than optimistic commentary from many peers. Today's guidance could be an issue for Target, even if Q4 earnings exceed tempered expectations, but big beats or commentary on the strength of the consumer heading into 2023 will also be pivotal in determining the investor reaction. So again, the big thing is that it's not necessarily the data that comes out, it is the guidance, right? The guidance call that happens after we get the data. Not what grades did you get during this quarter, but do you expect to pass this class, right, by the end of the course? That's what people are looking for from these companies as well. Like, not how did you do in the short term, are you expecting to do well or do better in the long term? Or are you still expecting, headwinds and things that could stifle you and slow you down? In terms of tech news here, we've got techies that are gathering in Barcelona for the Mobile World Congress, which kicked off yesterday and runs through March 2nd. The trade show brings together mobile operators, device manufacturers, basically tons of different techies. And the theme here this year is velocity, unleashing tomorrow's technology today. So there's tons of categories, including the acceleration of 5G to immersive experiences and the metaverse. On the electronics front, Motorola showed off a smartphone concept with a rollable screen that can extend vertically from 5 inches to 6.5 inches, while parent company Lenovo unveiled a laptop with a similar technology. It can, extend a rollout screen from 12.7 inches to 15.3 that balances compatibility with a bigger display. So that's crazy. I'd love to look that up, see what that looks like. In terms of today's markets, we got a mixed bag across the board. In Asia, Japan up 0.1%, Hong Kong down 0.8%, China up 0.7%, India down 0.6%. So Asia all over the place. The footy in London down 0.3, Paris flat, Frankfurt flat. The Dow up 0.1, S&P up 0.1, NASDAQ up 0.1, basically flat for all those. Crude oil up a good bit, up 1.6%. Gold down 0.4, Bitcoin down 0.3, so back, beneath 24,000. It's at $23,350. And then let's see here. In terms of data coming out today, we've got retail inventories at 8:30 a.m. That might have affected things, but I don't see it being huge. Consumer confidence at 10 a.m. That might be something where we see some volatility at 10 a.m. But those are really the only things out of everything that's kind of coming out that would be significant. And then we'll finish up here with our rapid fire bullet point rundown here. Let me also make sure that what do we got going on? So Tuesday. I'm trying to make sure that we don't have any major things going on. So Thursday this week, we have initial jobless claims. That's important. So we get jobless claims Thursday morning. We're going to have to make sure that we factor that into our trade plans. But other than that, that kind of looks like the biggest thing, right? We've got some members of the Fed speaking, but a lot of it is not during market hours. So overall, it's really jobless claims on Thursday, which is nice. So all you got to do is worry about earnings, earnings reports, and then the jobless claims on Thursday. But back to our rapid fire bullet point rundown, WSB. Survey results, Seeking Alpha community split on a 4-day trading week. Meta, ticker META, is building a top-level product group focused on AI. Every big tech company has to at this point. With Juul up in smoke, Altria, whose ticker is MO, sets sights on vaping brand Enjoy, NJOY. McDonald's expands Krispy Kreme, ticker DNUT, to test more locations. Will it last? Zoom shows off better than expected Q4 results. Yellen to Ukraine, another high-profile trip for economic support. So I guess Janet Yellen going to Ukraine. And then China lithium investigation set to cut around 10% of global supply. That's not good, right, in terms of lithium, which we need for all these batteries that are powering the future. AMC jumps as 8 conversion injunction hearings set for late April. White House sets deadline to scrub TikTok from federal devices. Commerce Department launches first funding opportunity under CHIPS Act. So that'll wrap us up here for the pre-market rundown. It was a heavy one. Sorry, I hope that this thing can go ahead and awesome. Hope I wasn't blurry the whole time right during that segment, but that'll wrap us up here for the news, notes, and information that are important to keeping us profitable here, over the course of this week. We had to go over a lot considering the fact that I wasn't here yesterday, but it was a day that I definitely needed. So glad to, kind of come back rested, recharged, ready to dominate the rest of the week. What else do we got going on? I mean, that's really, really pretty much it, right? If you got any valuable information from this segment, and I know you got a lot of it, we went over 3 days worth of valuable info to lay out the groundwork for this week. All I ask is that you show love to this account, right? Share this, right? Throw this on your story, DM it to somebody, comment on the content. We got tons of free content coming out on YouTube, coming out on TikTok, coming out on Instagram. Interact with that, right? Let me know what shows you value, right? What you like, what you get good things from, because otherwise, right, I won't know what to make more of. So it's kind of a give and take relationship. Make sure that we are making sure that we're building together, right? And feedback, communication is super, super important. So I appreciate it, right? I get on here, share this information with you guys for free. So let's continue to build each other up, continue to work toward our combined goals, and close the gap between where we are and where we're looking to be. So I appreciate everybody popping in, showing love, investing in yourself. You did get 1% better. Pat yourself on the back for that. I'll see you back here tomorrow morning for our next pre-market rundown session. Have a good one.